Welcome back to our weekly market recap. So 2 weeks ago, the US military strikes on Iran sent shockwaves through global markets. Oil spiked, equities held their breath, and everyone waited to see which assets would crack first. And Bitcoin didn't crack, it rallied. And here's the thing, it wasn't just noise. Yesterday, our MarketVector Crypto Heat Index fired a buy signal, one of only a handful of buys in its history. So the timing right in the middle of the geopolitical chaos. So what does it mean when the most volatile asset class on the planet outperforms during a military escalation? So is Bitcoin finally behaving like a macro hedge? Or is it just a lucky bounce in a risk-off market? And that's exactly what we are diving into today. So, before we go deeper into the charts, first, let's set the scene because context matters here. The conflict between Israel and Iran has escalated further this week. We all know that. So we had fresh strikes on Tehran, continued missile activity, and ongoing concerns around the Strait of Hormuz. And that last point is critical. So any serious disruption to Gulf oil flows doesn't just spike energy prices, it triggers a chain reaction. Yeah, so higher oil means higher inflation expectations, which shifts rate outlooks and which directly affects how much appetite institutions have for high beta assets. And crypto is very much in that category. So to their credit, US policymakers seem well aware of this. So there are reports that Washington has moved to ease certain restrictions on Russian oil exports, essentially an attempt to cap energy prices before they get disorderly. And the message from that move is clear. A controlled oil environment keeps the door open for risk assets, and an oil price that goes vertical slams it shut. And traditional markets have already felt the strain, right? So here we have the oil volatility at extreme highs. Yeah, it was just higher during COVID, but you see the S&P 500 dropped around 1.5% on Wednesday, and the Nasdaq was also off nearly 1.7% on that day. The VIX remains stubbornly elevated in the high 20s, and the dollar index. Let me pull up the XY. Where do we have the XY here? Here, the dollar index is also up firmly, touched the 100 mark. Now we are below. So typically, yeah, higher dollar is also a headwind for crypto. But let's see if this will be resistance. So, and yet crypto pushed back. Yeah, so the total market cap gained roughly 2 to 3% in the last 24 hours, with Bitcoin trading now almost 73K. And if you look at this chart here, that's since the US-Israel attacks, and you see here that's the when I call Bitcoin ETF is up, also up in the pre-market, and you see that anything else, gold, SPY, bonds, they're all down. Yeah, that's not your typical move. Dominance is also ticking higher too, which is a classic behavior when macro stress is elevated. So the market defaults to the biggest, most liquid name first, and that makes Bitcoin less of a momentum trade right now and more of a live read on whether risk appetite is genuinely returning. So the structure is where do we have Bitcoin? Sorry. The structure is very, very encouraging, right? We are below the 70K level. Bitcoin is defending higher lows, but the higher highs haven't been convincing yet. So the real question is whether volatility shows up. It already has. And the question is if Bitcoin can hold its trend while the macro says it's hostile. In that environment, very interestingly, our crypto heat index, our sentiment index, fired a buy signal yesterday. We are almost out of the freeze zone. That's our at exposure zone. The main components for this index are relative strength against Bitcoin, the trend of the underlying components, new highs, new lows, and we calculate our own advanced decline line. But we look at a universe of top 100 coins. And so the two decisive factors are here. Relative strength, so altcoins are outperforming, Bitcoin is rising, and we don't have any net new lows here. And that's also turning. These are the dominating forces at the moment. And if we look at the components of the top 100 index, you see, and if you compare that with videos from last week's, more and more coins are here to the right, and especially up to the right. Yeah, that's 3-month return versus 1-month return. These are the coins colored by the sectors. And so more and more coins are positive, have positive momentum, and you see more purple here, and that's the EI trade. And let me comment on a few. For example, Render. Render has outperformed the broader market meaningfully this week, and the driver is structural rather than speculative. So the network provides decentralized GPU compute, essentially renting out idle graphics processing power for AI workloads. Yeah, think of 3D rendering and video. So with global demand for high-end chips like the Nvidia H100 far outstripping supply, platforms like Render are picking up, and they offer real utility-driven interest. So this isn't a narrative play, it's a direct beneficiary of the AI infrastructure build-out, and it's showing up in the price. Another one of the top picks we had also recently, Hype, a clear outperformer. And the story here is that Hyperliquid has positioned itself as a round-the-clock trading hub for macro assets. You can trade oil futures, equities, commodities, all accessible to crypto-native traders through its permissionless perpetuals platform. So in a week defined by Middle East tension and oil volatility, that's a powerful value proposition. So the platform reportedly handled over $1 billion in oil-linked perpetual volume in a single day, dwarfing comparable activity on regulated competitors. Add in a buyback program funded by nearly all platform revenue, and you have a token with real cash flow mechanics behind it. And then we have people like Arthur Hayes named it his family office largest non-Bitcoin position, which tells you institutional attention is building. Next one I want to highlight here is OKB. Yeah, that's a centralized exchange. So OKB's big move this week came from a single headline. The Intercontinental Exchange, the ICE, the company that owns the New York Stock Exchange, took a stake in OKX at a reported $25 billion valuation. That's not a small deal. And the partnership also includes ICE licensing OKX spot prices for regulated futures products and plans to give OKX users access to tokenized NYSE equities. Yeah, so for a crypto exchange token, that's a directly legitimacy injection from the heart of traditional finance, you can say. And the market reacted accordingly. Then another two, because it's really interesting, where do we have it? Tau. Tau has been gaining traction this week, also on the back of broader AI sector momentum. The catalyst was Nvidia's reported plans to launch an open source platform for autonomous AI agents, a development that lit up the entire AI token space. And Bittensor, which operates as a decentralized machine learning network where models compete and are rewarded in Tau, is one of the most credible infrastructure plays in the theme. Grayscale recently updated its Bittensor trust pricing methodology, and a NASDAQ-listed company called Tau Synergies has been actively building a position about 54,000 tokens. And last but not least, I have to mention it, P Network. It's this point here. So that's the wild card of the week. It's over 100% or almost 100% in 1 month. So the immediate trigger is a Kraken listing going live. That's one thing. Expands market access. The longer term story is more interesting because the team has outlined plans to use P's global node network for distributed AI computing. Whether that vision materializes is a separate conversation, but for now, the combination of a major exchange debut and credible AI utility narrative has the market paying attention. Yeah, and that's also behind the Heat Index seeing more breadth in the market. So where does this leave us heading into the weekend? Bitcoin is behaving like a macro leader, absorbing the fear first, but still holding structure. The Heat Index buy signal yesterday has so far aged well. And in the altcoin space, the clearest theme is AI infrastructure. Yeah, think of Render, Tau, Hype. That's the exchange, the TradFi names traded on a decentralized exchange. So that's real product market fit, not just a hype. So next week, all eyes are on Nvidia's GTC conference. So if Jensen Huang delivers a strong AI message on Monday, expect capital to rotate hard into crypto's AI token basket. So watch that as your leading indicator. And we will be back with more next week. As always, if you found this useful, subscribe and hit the bell. It generally helps. See you then. Thank you.